Welcome back to another weekly market outlook. This is for the last week of February, starting from the 26th of February 2024. So let's do a quick recap of last week. We actually don't have a lot of key fundamentals coming up from last week, but I guess that's kind of a good sign. We saw the Canadian inflation does come back down overall with the trim CPI or the core CPI. It went down from 3.7% to 3.4%. RBA monetary policy meeting minutes and the FOMC meeting minutes, as I previously mentioned in the outlook last week, we're not expecting too much. We're still looking at a little bit more of a cautious, hawkish central banks from Australia and the US. Flash PMI numbers overall, if we take a look at the manufacturing numbers from last week, I think we did see a little bit of a drop in the German numbers. The France number was up. Overall, with the Euro flash manufacturing PMIs, we see a little bit of a downward push there from 46.6 to 46.1. UK manufacturing was slightly down as well. Previous number was revised up to 47. We got 47.1. That is still below the expectation of 47.5 from the UK. The US number was a good surprise to the upside. We got a previous revision to the upside to 50.7, and then the actual number was 51.5. A little bit of a drop on the services there, but again, I think this could be a good indication of the numbers that we are waiting for this week, which is the ISM manufacturing PMI. So that's pretty much it from last week, apart from the Nvidia earnings that kind of disrupted the global markets a little bit. Not disrupted, it kind of boosted the Japanese stock market. Nikkei 225 was at the all-time high, beating the 1989 high. Again, this is on the back of Nvidia earnings being above what the market is expecting. So that does push the indices up. It pushes stock market up last week. All right. This week, we are going to be focusing on a little bit of data here. We've got the Australian inflation number. That's going to be on Wednesday. So if we take a look at the expectation from the inflation number from Australia, this is kind of still in line with what the RBA is expecting. Inflation is kind of cooling off, but they still just want to be on a standby just in case it does pick up and they need to hike interest rate again. But yeah, they're not looking at interest rate cuts because the CPI here, we're looking at 33.6% to 3.4%. That's kind of the expectation for the Australian inflation number. The RBNZ is probably going to stay put at 5.5%. We're not going to be looking at any changes from central banks, at least not this month. And then we have the US preliminary GDP numbers. Again, preliminary GDP numbers, we're probably going to be looking at a kind of a flat number, remaining at 3.3% growth there. Still a good growth. It's still about 3% considering. And then we have the Canadian GDP numbers, but I think the main focus would definitely be on Friday. We have the Chinese manufacturing PMI numbers. Chinese manufacturing PMI numbers was kind of a little bit on the downside. It was below 50, so we're looking at whether or not this can actually come back up above 50. Expectation is still for a drop in the Chinese manufacturing number from 49.2 to 49.1. If it drops any lower, it's actually going to take risk away from the market. So be a little bit more careful, even though you're not focusing a lot on the Chinese number there. It will impact a lot of the risk assets in the market as well. Then final data, obviously, it's going to be the ISM manufacturing PMI numbers coming out from the US. We are looking at a little bit of an improvement, 49.1 to 49.5. It'll be a good surprise to the upside if we get above 50 there. And then we have the revision from the UOM consumer sentiment numbers. Again, we're looking at the revision to remain flat. This is still a good number at 79.6 on the UOM consumer sentiment index there. Okay. Fundamentals, we're done with that. So let's take a look at the technicals here. So looking at the Australian dollar here, one of the key levels to watch out for last week was 66 cents, and we saw market kind of push up towards 66 cents. Again, this was the previous fair value gap that's still going to be acting more like an order block for the Australian dollar. So far, it's kind of still hovering around 65.50. Again, a key level to watch out for is definitely whether or not it can actually break below 65, because breaking below 65 would see further drop on the Australian dollar there. Any break above 66, we're probably going to be looking at a little bit more of a ranges upper side movement there, probably between 66 to 66.50 on the Aussie USD. Now, for the Euro USD, this is definitely something of interest because we were looking at the resistance to kind of hold strong at 1.0850 to 1.09 block. And that's basically what happened last week. We saw market push up and attempted to pierce through 1.09. Obviously, it kind of failed miserably because it got quickly rejected below 1.0850. So we never cleared off 1.0850. So don't even think about 1.09. We're still looking at 1.0850 acting as a strong resistance for the Euro USD. So far, if we take a look at the price action here, that sharp rejection at 1.0850, 1.09 block does give a little bit of a stronger indication that, yeah, the market is still bearish. There are a lot more sellers lining up 1.0850, 1.09. So right now for the Euro USD, we might actually see a little bit of a shift here on the Euro USD. For as long as it's trading below 1.0850, I think there's still going to be a lot more sellers in the market. Obviously, the key level to watch out for next is definitely 1.08 because any break below 1.08 would confirm that, yeah, sellers would probably have the upper hand, and we could probably see the Euro USD getting pressured back lower towards 1.07, 1.0650 support range again very soon. Right. For the pound USD, also very similar situation. This one here is still in that Ichimoku cloud. So as I previously mentioned, it's still going to be a little bit more on the choppy side. But if we take a look at the resistance there, 1.2680, 1.27, that still acts as a resistance. That was a previous swing high. We never actually closed above that, so we don't actually have a break of structure on the pound USD. So we're still looking at a strong resistance at 1.2680, 1.27 on the pound USD. So we still anticipate this one to act as a resistance, and if sellers does kind of continue to pressure the pound USD at these levels, then we are actually anticipating the pound USD to actually move back down a little bit closer towards 1.26 in the near term. For the Dow Japanese Yen, symmetrical triangle last week was kind of an easy read on the Dow Japanese Yen. Sure, we didn't have that strong of a push because we're still being capped by 151, but it does break out of that symmetrical triangle. So this is still attempting towards that 152. For now, we have 151 acting as a stronger resistance at this point in time. Break above that, we're looking at 152. Support-wise, we have 150. Last week, that was the pivot level on the Dow Japanese Yen. That was kind of the medium price level before we see any breakout. So 150 is still going to act as a support for the Dow Japanese Yen. Below 150, we're looking at previous low around 149.50. Below 149.50, we still have 149, but a stronger support wouldn't actually come in until about 146 to 148 range on the Dow Japanese Yen. All right, lastly, it's gold. So gold, it's actually really interesting to look at gold because of how choppy the market is. Right now, we did kind of grind higher, but it didn't actually move back above the Ichimoku cloud. So we still have that resistance at 2040 for gold here. So for as long as 2040 caps the market, we're not going to be looking at any further progress to the upside. We're not anticipating that move towards 2060, but if there is a close above 2040 on the daily time frame, then yeah, we might actually anticipate that push higher towards 2060. But the thing to watch out for is because we haven't actually crossed over above 2040, so any selling that happens around 2040, that would be a strong indication that the market is kind of still bearish on the gold here. That could actually push gold down a little bit lower towards 2010 and 2000 in the near term. But right now, we're not looking at a trending market on gold. This is still purely in a sideways market condition. So with that, good luck with your trades this week, and I'll see you soon.